Well, hello. I hope you can all see the monitor, and I hope that somebody is passing out a sample of the manual that goes with this program. This is the real estate and tax planning package. And as I go through this, you won't hear the beeps. That's not available in the setup I've got right here. If you think it's hard watching this, you got to try talking to a computer. So we'll jump right into Extended Basic. And you can probably hear my disk drive. The program loads automatically. There's a set of programs on here. What you see is the master menu that lets you select any of the programs on the screen. And before I get into any of the programs, let me talk about the system requirements. You need the expansion box, the 32K memory, a disk drive, 2 preferably, Extended Basic, and a printer. And right now I'd like to start by selecting F at the bottom of the screen to install a program. And what this does is let you select the print device that you have. This one is for a parallel port. And you can use either a Gemini or Epson printer. So we'll select Gemini here. And the computer saves that, and we go back to the main menu. And what I'm going to do is I'm going to discuss each one of the programs in this package in the order they're shown on the main menu, beginning with the Mortgage Analyzer. So I'll select A for the Mortgage Analyzer, and that loads. And there'll be a little pause in between each one of these programs. These all run in Extended Basic, and they take a little bit of time, but they certainly work much faster than it would take you to do this analysis by hand. And there's the main menu. And what's happening now is the program is loading that information we saved earlier when we selected F. Now, from any of the main menus in these programs, you can load and save data and catalog disks. And let's start by cataloging the program disk so you can see what's on that. Just about all the space in the disk is used up, so if you buy this, you get your money's worth. So you can see there's quite a few programs and a lot of databases established. That's why I suggest you use 2 disk drives, so you can use the program disk in your first drive and then keep a data disk in your second drive. So let's go back to the main menu here. And this is the Mortgage Analyzer. And this program is on here basically to take the mortgages established in 2 of the other programs that we'll talk about later and give you monthly amortization schedules. And this includes things like interest and principal and payments and your loan balance and accumulated interest. So you can use this program for a lot more applications, and what I'll do right now is give you a little sample, and we'll buy a car. So let's pick 3, define financing, and we'll define 1 loan, and we'll make this new car, and we'll buy an expensive car, let's say for $20,000. It's expensive for me. And let's say we finance this for 5 years, which is 60 months, at 11% beginning this month and this year. And there's no balloon amount on our new car. So we hop right into Calculate Mortgage, and we can do this for 1 or all loans. And since we only have 1 loan, we'll just take all loans for the first year just to see what our payments are like. And this takes a little while, not too long. And you have the option to print your output on the screen or on the printer. Now there's a sample of the printed output in the manual that I hope is going around, and that contains more information than you'll see here on the screen. And what you see is year 1, and the columns are principal, interest, and payment. In some cases your payment might change if you're working with more than 1 loan. You can work with up to 4 loans. Any loan can have a balloon payment. They can all have different interest rates, be different amounts, start at different times. So you had two loans and one started in the middle of the year, you might see the payment change. So what this shows us is our payment is $434.85, and through the first year we paid a total of $31.75 on our principal and $2,000 on our interest, and the total amount we paid was about $5,200. So let's go back to the main menu, and that's pretty much all this program does. So we'll leave this program right now. I'm not going to save any data, and go back to the main menu, and let's select B for home purchase analysis. Now while this loads up, I'll describe what this does. Basically, whenever you go visit a realtor, if you've never purchased a home, a realtor will perform this analysis for you. And what they're trying to do for you is help you make a decision on whether or not it's beneficial to you to rent or to buy. It does a rent or buy analysis. And this is the first thing you need to do when you purchase a home, is because a home is an investment, and you want to decide whether or not it's going to be to your benefit to buy a home as an investment. This program takes a little while to load. Both this program and the following program, the income property analysis, use just about all the available memory in the 32K memory. And as you see the main menu here, this loads a considerable amount of information on your tax database, which I'll talk about a little bit later too. So as I look at the screen here, my disk drive is working away, loading all the information that we need to run this program. I used this program to buy my home. It worked pretty well. Should be just a few more seconds here. If you have any questions, just raise your hand. Okay, there we go. Now there's the main menu, and like I said, for many of these programs you can load and save data and catalog disks. Let's hop right into number 3, which is enter and change data, to enter data, and we'll buy a sample home. The first question that you have is, do you have a home in mind? Now, the person that doesn't have any idea what they can afford can use this to find out what they can afford. If you have a home in mind, you'd enter Y for yes, and you'd go on from there. So let's assume we don't have a home in mind, and let's assume between a married couple, let's say a married couple makes $50,000, and that the current mortgages being offered through the Federal National Mortgage Association, that's FNMA, the annual percentage rate, let's assume, is around 12%. That's about what it is right now. And what this tells me is that I can afford to pay about $14.37 on the home, and property tax would be $116, and this is monthly. Insurance would be about $29, so that my total monthly outlay would be about $15.83. The purchase price for a home that would cover would be about $139,779. Now, I'm from California, and that's probably reasonable in California. I don't know if it's reasonable where you are, but the one thing in particular, the property tax was figured based on the way it's figured in California. Now, all that is completely discussed in the manual, and there are ways that you can change that according to how your state property tax works. This also assumes that I put down a down payment of 10%, which is what the $13,977 is. So let's continue here. And you see the information that was on the previous display. Now, if you had a home in mind and pressed yes, you'd go immediately to this section and enter the numbers that applied to the home you had. In this case, the purchase price and the market value are the same. In some cases, it may be different. You might purchase a house below market value, which would be to your advantage. And it assumes we had a 10% down payment. Now we're going to enter a house appreciation rate, which is how much you think the value of your house is going to go up in 1 year. and I'll assume that's 4%. There's our gross income, and let's say that my current rent is about $8.50 a month. Safe rate of return is a number that you put in, which is rate of return that you feel you could earn on money that you had invested. You feel comfortable with that. And let's say that I bought certificates of deposit which are earning about 10% right now, so I'm fairly sure I could earn 10%. And my tax filing status is married joint, and I have 2 exemptions. Now here's where you enter your financing. You can use up to 4 loans, just like the previous program, and the previous program uses the database established by this program so that you can calculate monthly loan schedules. In this one, we'll just accept the loan given, which is assumed to be a Fannie Mae loan, and that's the loan that I would need to cover my mortgage, and it's assumed to be 30 years fixed at 12% starting right now. Now we go back to the main menu, and you're all ready to calculate the results. Now, there's a sample of the printed output in the manual. The output is much too detailed to show on the screen here, so you don't have the option of printing out the output on the screen. So I won't go any farther with this except to enter 5, which has changed the economy. And this is the section that you would jump into if you had tax laws that were different from California, or if you wanted to make different assumptions about the way numbers were calculated. So we'll hop in here and I'll show you what's on here. Now P-tax stands for property tax, and this 0.01 that's shown here assumes that 1% of the purchase price is going to be my initial outlay for tax for the first year, and that's the way it works in California. Now P rate is the property tax rate. In California, your taxes go up 2% of that initial value each year, so you can change that accordingly for your state. Insurer is an assumption that your insurance is going to be about 0.25% of the purchase price for your home, which is generally what realtors assume. Allow is the allowable percentage of your gross income that a bank or a financing institution will allow you to spend on a home, and that includes your mortgage and your property tax and your insurance. In this case, we assume 38%. So 38% of the $50,000 that was put down, or that was the gross income entered, is used to purchase the house. Inflate is a number for inflation. I picked 4%. And fee is a number for a realtor's fee. When you see the output, all this will be hopefully become clear to you, and you'll see how fee and all these other things are used in the calculations. They're of course described in detail in the manual. You can change any one of these and make any assumptions you want. So let's end this session. And before I end this session, let me say that this is really the kind of information you need to know before you make a purchase on a home, and it will tell you whether or not you're going to be successful owning a home. And there are a lot of things that affect that, like whether you know you can own your home for 2 years and then you have to move. In that case, you may be better off if you're going to rent. So let's hop right out of here and go back to the main menu. Now I'm going to select C for income property analysis. And what I'm going to do is I'm going to edit out the waiting time to make this a little bit shorter. The main menu, and I just waited a little while, maybe about 30 seconds, 40 seconds. And what's going on right now is the program is loading the same kind of information that was loaded on the previous program, tax information and things like that that are used as databases in the calculations. And there's the main menu. Now I'm going to load a, well, let me catalog another disk that I have here first to see if I have a sample database on there that I can use with this program. And the third program there, well, the fourth program, IPA Park, stands for Income Property Analysis Park. And that's an income property analysis that I did on a condominium in Park City, Utah for a friend of mine. So let's go load that and take a look at the numbers that are on there. Now this program is for the sophisticated, well, maybe not so sophisticated real estate investor. This is a program that you use if you want to decide to purchase income property. And that income property can be anything from a 40-unit apartment complex to just a single-family home that you want to rent. And this will give you the kind of information that you need to know to decide on whether that's going to be a good investment. So let's start with 3, which is define investment, and you go to another menu which and with 5 things on it here, and let's jump into describe property. This is the property that I analyzed for this gentleman, and it's a 1-bedroom, 2-bath condominium, and he wanted to buy this and use it as a place to go skiing. I don't know if anybody out there in the audience has ever been to Park City, but that's a big ski resort, and his building was worth $72,000. That number is used in depreciation later on, and the land was worth about $8,000, and he had about $4,000 worth of equipment, which was furniture and a dishwasher and things like that he wanted to depreciate. Now this program will depreciate both the building and equipment. He was going to put down $10,200 on it. That was the last number on there. Now let's put in annual operating data. He expects to collect annually about $9,700 in rent. Now there's no other income. Other income would be from things like candy machines. If you owned a 40-unit apartment complex, you might have a candy or Coke machine, and that's what other income would be. He's going to start collecting rent in January. That's what the 1 is. And he expects that the place will probably be vacant a couple of weeks out of the year, so he's going to lose some money there. So his gross income would be about $92.25. Now there are 24 categories for expense items in this, which are things that you would be writing off on your taxes if you owned an income property. And I'll just go through these real quick. While you look at the menu, I'll just accept the numbers that are there. And here's the other 12. So we'll just accept those too. And then we get our total expenses and net income, which is about $24.73 for the year. Let's take a look at number 3, depreciation data. This asks me if I want to depreciate my equipment, and of course I do. And for equipment, you can have 5 or 3 year property. This all works using the accelerated cost recovery system, and equipment is generally like dishwashers and things is generally 5-year equipment. So now where we are is depreciating, let's see, regular ACRS or straight line. Well, we want to use regular. I got a little bit ahead of myself there. Okay, now we're going to depreciate the basis, and this was the building value. The IRS calls the building value the basis, and we're going to use regular ACRS for that. Now ACRS depreciates things like buildings over an 18-year period. Last year it was a 15-year period, but this is an 18-year period now. We're going to put this place in service in January. Okay, let's take a look at number 4, comparative investment. You can compare your rental property to an investment of your choice. Its performance will be shown as opposed to another investment. And this investment, I selected a mutual fund, and I felt like I could earn 15%. This is similar to the safe rate of return in the previous program. And my initial investment in this was going to be the same as the down payment on my income property, which was $10,200. So now that we've answered all those questions, let's go back to the main menu and take a look at the financing that was on this place. And this works similar to the first 2 programs that were already shown. There was one loan on here, the Good Deal Loan Company, and the gentleman I ran this for was going to take $72,000 over 10 years at 13% with a balloon payment of about $68,000. Okay, let's take a look at number 5, which is the economic condition. Now this is similar to the first program when we selected change economy, and what I've selected here is a property growth rate of 4%. The buyer's tax bracket was about 38%. I'm going to increase the rent each year by 5%. I assume that inflation is going to be about 4%. If I sold the house later on, I would assume the realtor's commission was about 6.5%, and the real estate tax rate, which is how much my real estate tax goes up a year, is 2%. And that's again for California. It turned out there weren't too many differences between California and Utah for this gentleman, so all that remained the same. Now I could go to, well, 6 and 7. 6 is output the inputs, and what you get is a really nice display on one page. There's a sample of that in the manual of all this information that we just put in. This doesn't come out on the screen, it comes out on your printer. I'll show you what you can get for evaluate investment, which is number 7. So let's go down there. There are 3 analyses that can be performed on this, and one is a cash flow analysis. And what that shows you is as you own the property, what kind of cash can you expect to be putting in your pocket as you rent it out? And that figures in depreciation, figures in your tax benefits, figures in everything you need to know, so that the bottom line is, did you make any cash that you could put in your pocket by owning this place? The next analysis is a sales analysis, which shows you how your equity grows and gives you some information on what you could expect to pay for capital gains if you sold the place. It shows you how your principal builds up as the mortgage is paid off, hopefully by the renter and not you, if your cash flow is the way it should be. Number 3 is a return on investment. And now that shows you basically 2 things. It shows you 3 things. The first 2 things deal specifically with your property, though, and their return on investment as measured when you look at the cash flow that you calculated in number 1. And that's assuming that you just keep owning the house. What's your return on investment? Now it shows you a return on investment if you sell the place too. You might never break even if you own a place and keep renting it. You might always lose money, but all of a sudden when you sell the place, you might make some fantastic capital gain that you can put in your pocket, and that's what that shows you. The third thing in the return on investment is it shows you your alternate investment performance. So you can measure your investment property against any alternate investment that you select. So let's leave this, return to the main menu, and that about covers that program. And I've used this program. I wrote this program originally because I bought TI's module on income property analysis, or on property analysis. While I'm talking here, I'm going to press D and load the tax estimator. And the reason I wrote the program was because the module that I bought, and I think I bought it for around $15, didn't use the new accelerated cost recovery system, which was started by the government in about 1982. I think the module was made in about 79, and that was the biggest reason for me to write the program. But I also found that the output of the module was very poor. It didn't show you the kind of information that I felt was necessary to be able to make a decision on whether to rent or to buy a rental property. And that was the reason for writing this program. And I've used it to analyze a lot of properties for investors for a fee, of course. And I've used it to speculate on income property myself, and it works out very well. It gives you a very quick analysis of what the situation is, and it lets you know right away if you're going to be a big winner or a big loser. It's the kind of thing you really need. Now what this program is a tax estimator. It's not it doesn't fill out your tax forms for you. What it does is it helps you plan throughout the year so that when you're ready to fill out your tax forms, you're not going to be a big loser when you pay your taxes. And it, again, is loading the same kind of information that the previous 2 programs were loading, the same kind of data. Okay, and here's the main menu. And I'm going to start off by, again, loading a database I've got established for me, so that the data is there and we can just step through it. And that's our tax 85, which is my tax estimate. And we'll take a look at some of the numbers on here. I used this to figure out, recently used this to figure out whether I wanted to purchase an IRA, and I found out that it was really to my benefit to pick up an IRA. From the $2,000 that I was going to put in, I was going to get about a $600 deduction, which was about a 30% return on my money. So let's jump into interchange income. Now you can use up to 3 sources of income if you and your wife work and you have additional income or something like that. My wife and I both work, so I have 2 sources of income, and each source of income can have a different payment period, and they can be weekly, twice a month, or monthly. And for source number 1 here, we show monthly. So what you see on here is your income. That's total income, including federal income tax and state income tax. And you see what was withheld for federal and what was withheld for state. So we'll accept those, and I don't want to put in any more information. It's already all there. But if I had just entered the first line, then I would take yes right here, and it would fill in. If I hadn't filled in any of the other information, it would fill in all those numbers for me. So if you're pretty confident your pay is going to be the same, then you can just enter the first set of data, and the computer will copy the rest in for you. And I'm just going to leave this right here and go back to the main menu. So let's take a look at number 4. My filing status is married joint, and I have 2 exemptions. And these are the things that I can enter on my 1040 long form that are related to extra income. And that's what I estimated for 85. So let's just go through these. A person asked me a while back about Childcare, which you would claim on the next thing. If you have other sources of income, what you can do, for instance, if you have something that's not on this list, is you can substitute, let's say, whatever it is, you can substitute it in for farm income, and it would work just about the same. These numbers just get added up. There's nothing special done to them to estimate your gross income. These are your adjustments. Now, a gentleman asked me about Childcare, and it's the same thing. After you've estimated your gross income, then these numbers get subtracted away from that to give you an adjusted gross income. So if you had Childcare, which wasn't on here, you could substitute the number in for moving expense, and you'd get the same results. So that's my 1040 data. Let's go in here and take a look at Schedule A. And this is the data that you can put in for Schedule A. So let's just jump right through here. And that's just about all the data you can put on Schedule A anyway. There's something in there for everything. Now this program, well, let me talk about number 6 before I compute my taxes. Number 6 is a list of all the data that we just looked at on your printer, so you can get that out and take a look at that. Now let's take a look at number 7. You can get complete output for this program on your screen. The output isn't very detailed, so it all fits on here very nicely. So what this shows me is my 1040 results. Total income and adjustments and adjusted gross. Now that's the amount that I get taxed on. Well, minus my Schedule A deduction and my exemptions. So it says here my taxable income is about $36,000, and I'm going to owe, based on that income, about $6,500, but they withheld about $8,900. So I get a refund, which is about $2,385. And now we take a look at Schedule A results. And we'll go through these. Now, I didn't have any medical deductions, but if I would have, this says that I would have had to have had more than $25.90 in deductions to take any deduction. I have an exclusion there. So I have no medical deductions. My state tax was added up for me when I entered my income and my federal income tax withheld and my state income tax withheld. That was added up for me and placed in here automatically, so I didn't have to enter that in. My property tax is there, and all these other numbers were numbers that I entered. And it figured out my zero bracket amount, which was $3,400, which is what it is for a married joint. If you select a different tax status, then it puts the appropriate number in there, and it gives my Schedule A deduction 13,771, which is what appeared on the previous display. So let's go back to the main menu, and that about sums this program up. And this is a very handy little tool to tell you whether you're withholding the proper amount or what some kind of investment, like a real estate investment, is going to do to your tax situation. You get that kind of information on the outputs for the other programs anyway, but this is a more finely tuned estimate. Now we'll pick E for tax bracket update, and this is the program that you use to keep from having to buy new tax programs. Hopefully Ronald Reagan won't change the tax laws too much and completely obliterate all the work I've done here, plus make life more difficult for all of us. There shouldn't, from what I've heard about the tax laws, though, there shouldn't be any problem in using this program to update the database used by the tax estimator. I'll make some other statements after we take a look at this, too, about getting updated versions of this program. I'll provide updated versions of this program for you. Well, maybe I better make them now so I don't forget. I think the price is going to be about $5. For $5, if you're a registered purchaser with me, that means if you filled out a little sheet that comes in the back of the manual, I'll send you back a copy of an updated version of all these programs. So you'll always have a good copy. Now this tax bracket update, what we'll do is we'll take a look at interchange data. This is what you would use once a year to update your tax base. And the maximum number of brackets, what this uses schedules X, Y, and Z, which you find in the back of your 1040, your little 1040 guide that has all the tax tables in it. And out of all those schedules, X, Y, and Z, the maximum number of brackets in one of those schedules is 16. That's the number that's shown here. Now let's take a look at Schedule X for single. And the maximum number of brackets there is, let's say, 16. I don't know if it's 16 or less, but we'll be safe by entering 16. And this is the data exactly the way it's listed in the back of that guide. These are the numbers that you have to put in there. And those are the titles that you find on top of the columns for those numbers too. So you can enter that data just the way you see it. And this is all completely explained in the manual. If you had any questions, you can consult the manual. It should clear things up for you right away. Now I don't want to make any changes to the database on here because I don't have any new information. So I'm going to leave this before I make any mistakes. And I'll be all set. So that's a pretty good summary of all the programs that are in this package. Now let me go to the final screen here. I'll press the space bar and escape this. Okay, this is the bottom line. You can purchase this package if you buy through your club for $25, and that includes the disc with all these programs on it and the manual. The manual is very extensive. I hope you'd all had an opportunity to take a look at that. Like I said, I can provide updates for registered purchasers of the program for $5, and what the $5 covers is postage and an envelope for me to send it back to you in. Now you can buy direct from me by mail for $30, and my address is shown there. That's the name of my little business here, which is very little. And let me say again that I think there's quite a few programs on this on this disk, and I think it's well worth the very cheap price. I had a friend of mine do a market survey to see what kind of programs were available. First, I wanted to make sure there wasn't a package like this out for the TI before I wrote the thing. And we took a look at IBM software and Apple software, and most of the programs ran between $150 all the way up to as much as a few $1,000s, and they did just about exactly the same thing. So the reason the price is so low is because I'm just getting into the TI market, and I hope to sell other programs. I won't sell programs like this in a big package because it's much easier to put one program on a disk and sell it for $10 than it is to put 5 programs on a disk and spend 2 years programming and then sell it for 20, 25. So I think you're getting a good deal here. And these are written in extended basic. There's no protection on them. That's another reason for the low price, is to discourage piracy of the software. And I think even if you're not an experienced programmer, if you just list the programs and look at them, you'll get quite a bit of information on there about how certain things were done in the programs. All these programs, another thing I forgot to mention was all these programs have error protection on them, so that when you're dealing with some data that you've put in and you try and save that data, for instance, out to your disk, and you've forgotten to put the disk in the drive, the program will give you an error message, and it won't bomb, and it'll tell you which page in the extended basic manual to look on for the error code, to tell you what the error is, and you can go back to the main menu and then successfully save your data without losing that. And that's something that was that's been pretty good, because I always forget to close the door on my disk drive, and I forget my disks and everything. So I hope you enjoyed this, and I hope you buy a whole bunch. Thanks a lot for your attention.